Welcome to the News.Markets Business Book Club. Today we're reading The Idle Investor, a book that claims to offer 3 simple DIY strategies to earn high returns and beat the professionals. The book author and global equity fund manager Edmund Shing joins me now. Thanks for coming in.
No problem.
Is this a book for lazy investors?
I wouldn't say lazy, busy. People who are busy in their lives and don't want to spend a long time investing, that's what this book is for.
And you talk about 3 strategies, the
Yes.
bone idle strategy, the summer hibernation strategy and the multi-asset trending strategy. Now none of that sounds straightforward, simple or low risk.
Oh no, it is. I mean, risk is always difficult to describe. When you think about what I talk about in the book, I'm not buying individual stocks, first of all. We're buying exchange-traded funds. So we're buying funds which are diversified, and therefore that lowers the risk a little bit. But the bone idle strategy, for instance, is dead easy. In fact, you've only got, I think, 2 things to do all year, and the rest of the time you can forget about your money, let it do its thing, and get on with life.
So it's about setting aside a particular amount of time each week, each month, each year?
Well, in fact, the bone idle strategy is literally twice a year doing something. The rest of the time there is nothing to do. As you progress to the second strategy, the summer hibernation strategy, there's something to do 4 times a year. Again, the rest of the time, nothing to do. The final strategy, the monthly asset trending strategy, as it says, monthly, there is something to do once a month. But actually, you only need to check a few things, and even then you may say, actually, everything's fine, I'll leave it alone.
So it's a user's guide, but you can almost learn as you go. As you get more confident, you can get more involved in the markets.
Exactly. I mean, all the strategies, I would argue, are simple. I can describe them to my children, and they will know what to do.
That's the theory. What about the practice? How does it work?
Well,
does it work?
Well, firstly, it does, because I've back-tested each of these strategies back 25 years. And over the last 25 years, they've all, as it says in the book, beaten the professionals and beaten the markets. Not necessarily by a massive amount, but I'm not trying to claim that this is black magic. This is very simple.
What kind of percentage are we talking about
We're
beating the
talking
market?
with a bone idle strategy by 3 to 4% a year on average, which over the long term mounts up to an awful lot on your invested capital.
And talking about long term, let's talk about trends, because you've got one chapter in the book which are 6 key investment trends for the future. In a nutshell, what are they?
Well, there are loads of investment trends. I think, for instance, the movement towards exchange-traded funds is a massive trend that will continue, because I think people who have invested in individual stocks have found it difficult. They find that they don't really understand what's going on. And what they also find is that classical unit trusts are very expensive when you figure out how much you're paying this manager to manage your money and do a fairly bad job of it. Whereas exchange-traded funds are very transparent and, most importantly, very, very cheap. So I think cheap is cheerful. Like Aldi and Lidl, we all shop there, and the ETFs work in exactly the same way.
So this book helps you pace yourself and also shows you how you might be able to manage a range of different investments at the same time.
Exactly, that's the beauty.
Ed Shing, thanks very much. Edmund Shing there, the author of The Idle Investor.